Hey guys, welcome to another market update. We have a lot to discuss, so let's get to it. First things first, I wanted to give you guys a quick heads up about some changes in the way I will publish things moving forward. So, because the theme of this channel is Bitcoin's power law, we should ideally focus on just this aspect on this channel. However, there are a lot of other topics I would also like to talk about. So I archived my old videos on my personal channel to change its focus. I have all kinds of exciting ideas ranging from more frequent market updates with different ways of looking at the markets to short documentaries once I save up for some equipment. I am also a filmmaker among other things, so I would really like to explore different possibilities, but I will start simple. For example, my next market update could be on that channel. I will still publish content on our Quantonomy channel like usual, but if you want to make sure you see all of my bonus videos and unfiltered takes, feel free to take a couple of seconds to subscribe to my personal channel as well. I will leave the link in the description and in a pinned comment below. So without further ado, let's get to the charts. A lot has happened over the past few weeks. When looking at the big picture, what has really happened over the past half a year or so? We had an over-exuberant rally based on Trump optimism, which left a pretty hefty CME gap. Then, as predicted, we had a redistribution zone long enough for whales to unload their bags on retail, followed by a sharp decline, which eventually wiggled its way down to close the gap. Much more importantly, we have retested a major support area based on previous multi-year resistance. Just like we predicted in the last video, we ended up forming a bearish continuation pattern. So far, we have retested the mid 70k region, which honestly is close enough to the projected low to mid 70k support region. While it's possible, nothing guarantees that we have to retest exactly 70k. Now, Bitcoin is trying its best to break through this downtrend, so we have to see if the storm is starting to clear. Now, let's get to the power law indicators, starting with the Bitcoin power law bands. We have finally broken below the full power law model projection line. It finally happened, guys. The power law is dead. You know, I'm just messing with you guys. What we actually broke here is the exponential bubble phase projection, which happens more often than not. All that really needs to happen here for a very successful bull market is for us to touch the top of the bubble from the underside, if not pierce it. But we have many months for that. Next, to the log graph. Just like discussed in some of our previous videos, the price action is strikingly similar when compared to this area, just in a much larger and grandiose way. We're even getting very close to retesting the same blue trend deviation line. Will we actually touch it? Maybe, maybe not, because we already got very close. Everything is golden as long as we don't break below it. Even then, we would still not break the bottom power law support, which is 10% below even the green line. However, the incredibly uniform cyclical nature of Bitcoin cycles would come into serious question. This is a pretty popular worry recently, with a lot of people saying that there is no realistic way for Bitcoin to reach our projected numbers in time. As Giovanni said, it all comes down to simple math. However, I will spare you the math and give you an easier way to calculate the average percentage needed for us to reach 200k by the end of the year. So, you can take a compound interest calculator, like this one, that allows you to specify the number of periods. In our case, we have 261 days until December 31st, or the end of the year. Put in the initial and projected price, so let's say 80k and 200k, and you can see that we really only need an average of 0.35% a day, which we have exceeded in the mania phases of previous bull markets. Next to the Bitcoin power law clock. It's currently 9:51, and as you can see, we had another bounce off the red average line. Only a couple more months until the average and the full model lines cross due to the rapid increase in the projection line's pace. Things should begin to get exciting pretty soon, guys. Fingers crossed. Next to the Detrended oscillator relative to price. We did it, guys. We reached the muddy/camo green valuation, which is really good value for what is typically the mania phase of the bull market. We didn't stay there for long, however, but you can't complain. We're still well below fair value. Next to the local Hurst Exponent. Things have completely shifted in Bitcoin's favor here, at least for the time being. Bitcoin is putting up a fight, and it looks like it wants to create a drawn-out topping phase to postpone the price reset for a future drop, instead of reversing immediately. Let's hope it can keep up the momentum. Finally, let's see what Minotaur has been up to recently. This is hilarious. I bought a hefty amount of Bitcoin for my girlfriend's long-term portfolio, pretty much exactly where Minotaur's more conservative 15-minute algo bought. I guess we think alike as traders. The reasoning here was the double bottom that formed, which is a strong bullish signal. Anyway, you can see that this purchase greatly lowered the average entry for the trading system. It is now in good profit and almost exited the trade here toward the top. The price missed the exit conditions by just a few dollars. Anyway, it does not matter if the price goes back up here to exit the trade or back down. If it goes back down, it will just increase the position size and lower the price even more to exit the trade at a larger profit later. Looking at the 5-minute chart is like traveling through time to see how the 15-minute chart would trade in the long term. Here's my personal account with a lot of completed trades in a short period of time. It feels great to hear the TradingView alerts go off multiple times a day while I'm working on something else. I'm using Bitcoin as collateral, so if the bull market regains steam, it will just be extra profit on top of Bitcoin's own gains, one small and low-risk trade at a time. The main news story is of course related to Trump, as it has very often been lately. Namely, Trump's trade war with the world, and in particular China, reached such extreme levels that both the US and China imposed tariffs way north of 100%. Trump underestimated his opponents, however, and China in particular was not cracking. Had the tariffs actually remained in place, US customers would have had to pay more than double the price for a new phone when going to the store. Thousands of businesses would have already gone bankrupt overnight just because they would not have been able to pay the tariffs for products that were already shipped before the tariffs were announced. Trump probably understood that the unrest would have grown dangerously high. Furthermore, the bond market was on the verge of collapse. Therefore, he begrudgingly announced a pause on tariffs and exempted certain goods from the tariffs altogether, causing a massive recovery rally. However, large call options and longs had been placed even before Trump's announcement about now being a good time to invest. Insider trading seems to be par for the course lately. Trump is being Trump and he's playing the market as if it were a ping pong ball. Interestingly, when comparing Bitcoin to the S&P, Bitcoin fared much better during the recent crash. This is highly unusual because Bitcoin usually trades at a 2x multiple in terms of volatility when compared to the S&P. This appears to be a great sign of strength, so let's hope it doesn't decide to follow suit later on. The M2 money supply has been a highly requested topic, so I thought I would cover this too. As many of you know, pivotal Bitcoin moves have a high degree of correlation with global liquidity. The theory is that a rising global money supply pumps the necessary liquidity into Bitcoin to drive it higher. However, there is a big delay between the M2 and Bitcoin. The good thing is that this delay has proven to be quite uniform in nature, so we can just shift the comparison to account for this delay. In fact, I recommend using this indicator named M2 Money Shift for Bitcoin, which has a 70-day shift as part of its base settings. If you want, you can go to the settings and edit the shift. Some people say it's 75 days and some say 70. Anyway, let's hope it continues being the leading indicator, because look at this next projected move. I'll take that any day. When we look at Bitcoin's recent price action and combine both the downtrending resistance and the support line formed by the bottoms, we get what looks like a falling wedge to me. As usual, be careful with these patterns. They can have fake outs and they're not guaranteed to work every time. However, if this bullish pattern continues playing out, then this is just another piece of evidence showing that any potential further downside would be quite limited. The time to be a bear was when we were at 110, guys. We may or may not go to slightly lower levels here, but that's one ridiculous gamble I would never take. I've been accumulating heavily at these levels, and I hope you guys haven't lost faith in Bitcoin either. If you'd like to support our work, consider subscribing to our LuxAlgo indicators by going to luxalgo.com/BTCPowerLaw. If you're interested in the Minotaur trading system instead, use the links in the pinned comment below to schedule a free consultation or ask any questions from the team by going to our free Telegram group's Minotaur trading system topic. This is Saverio speaking, and as always, thanks for watching.